repeat it at the end. But what I'd like to present, basically three key things, which you can um, take away from this session. One is 2025. The year 2025 for us has been good. It's been we've had a resilient financial performance despite the volatility which everyone saw globally last year. The other thing is 2025 for us was about disciplined execution of our mandate. So we'll talk about a few clusters where we show that we have been disciplined and delivered. The third thing is, of course, whatever that we do is for the benefit of Malaysians, and we will show the sustained delivery of capacity building as well as community development. So those are the three key messages. And I'll start with the first slide. Now here, I think just to remind everyone, our mission is to invest to deliver sustainable value for Malaysians under the banner of Advancing Malaysia. And we do this through being active in corporate Malaysia. We are global investors, but we don't just invest, but we build a network and knowledge transfer back into the country. We are catalytic investors, particularly in Malaysia for key sectors. And as I mentioned to you before, whatever that we do also benefits all the rakyat when we focus on building capacity and community development. Now, this is aligned with Economy Madani, which has a vision of raising the ceiling as well as raising the floor. And we have a role to play as part of Economy Madani, which is basically the being part of the Gear Up program, focusing on critical areas for the government. In particular would be like semiconductors, and also the I guess the bedrock for innovation for the country, which is the startup ecosystem. Raising the floor, as I mentioned to you before, we're about building capacity and community development, and here we do it under our flagship foundation, which is Yayasan Khazanah, as well as directly, this is through our K-Youth program and our encouragement for all our all our portfolio companies to also bring up living wage to 3,100 ringgit, which is what the aspiration. Now, let's look at 2025. Let's start with the backdrop that we had to navigate in 2025. So first, I think it was, in short, a roller coaster ride. We've had, at the beginning, when the US had President Trump coming in, and it sparked uncertainty in relation to growth. And in the second quarter, when Liberation Day happened, markets actually fell, but there was a quick reversal as well. But that showed the volatility that we were facing in the market. And throughout the year, there are many events which caused a lot of uncertainty. However, towards the end, we did see developed markets, in particular the US, where they had the One Big Beautiful Act. We saw EU focusing on infrastructure and defense. So we saw more fiscal spend, and that kind of like helped the markets going towards the end, as well as we also heard the Fed likely to be easing rates, which also helped markets in the end as well. Now, as far as Malaysia is concerned, we already saw policies being rolled out the year prior, and in a way it was about execution, and we saw very tangible execution, such as the Budi Madani RON 95. We saw an agreement on tariffs, which put it to one of the lowest in the region. And what we experienced, at least in Malaysia, was a strong GDP growth of 4.9%. Exports grew by 6.5%. We saw FDIs coming in with approved investments. increasing 13.2% year on year, at least for the 9 months of 25. We saw tourism arrivals increasing 12%, and at the same time, the market actually came back with a 7% year on year increase. And of course, we all know the ringgit strengthened by 10% in the year. So we saw strong fundamentals appearing in Malaysia. Now, this translated to looking at the markets. Sorry, next slide. Can you help me? All right. So I look at the markets, and throughout the year, the markets were resilient and absorbed the shocks. You saw that towards the end, as I've explained, markets actually went up. Markets actually went up, and the fundamentals remain strong throughout. Sorry, can fix this. Throughout the year, with Malaysia consistent at 4.9%. You saw ASEAN also being having that moderate growth, as well as other emerging economies as well. Now, next, I'll look at our own results. As you know, we are long-term investors, and we do look at the long-term growth of our fund. And here we see that the net assets has increased to 105 billion, and that means that we grew about 6.2% annual growth since 2004, delivering 93.1 billion to our shareholder. That's a cumulative return. Next slide. Total assets, we grew from 151 billion to 156 billion, and that was because one is the portfolio grew by 7 billion, and we gave a dividends to the government of 2 billion, so it's net increase of 5. Next slide. And here we show the performance. Our total assets is now at 156 billion, as I explained, and our net assets is 105. And over the years, this is important because we actually look at the longer term performance. We took in 2018 as a start because that's when we began to rebalance our portfolio. Profits from operations in 2025 is 5.6 billion, which is about 500 million higher than it was in 2024. We paid out a dividend of 2 billion. Our debt and balance sheet, that remains disciplined, and our balance sheet strength remains strong at 3.1 times realized asset value cover, RAV cover. And next slide. And here we look at our returns. Investment portfolio gave a 7-year return of 6.1%. So that's what we need to do. We have consistent growth over the long term. So we did 6.1% 7-year long-term returns. And in 2025, we achieved 5.2% returns. And this is explained by a breakdown by assets in the next slide. And over here, we show public markets was very resilient. In Malaysia, it grew 6.7%, which is a strong showing given that market was also about there. And public markets, 2025 was 11.7%. And over the 7-year rolling, we saw 6.6 for Malaysians, 10.1% for global. Just to let you know, the 11.7% return is a ringgit return basis. If we were to look at the US dollar return, it would be much higher at 23.6%. Now, we look at private markets. Over the 7-year rolling is 2.7%, and real assets 7-year rolling is 6.9%. 2025, in US dollar terms, private market was 6.8%, and real asset was 10.3%. But because of the strengthening of the ringgit, it actually was lowered and moderated down to what it is there in the screen. Next slide. Now I did mention about the second thing, which is basically 2025 was also a year of execution for us to deliver. So we completed the airport privatization, The completion was actually in May, but we closed the deal in February. So it achieved from a market perspective, it achieved its threshold in February. We also increased our stake in E.co from 10.6% to 31.7%. Axiata, which is one of our portfolio companies, completed a significant merger in Indonesia between XL and Smartfren, and that was quite successful. And at the same time, we ourselves reintroduced exchangeable bonds into Malaysia after a while. So we raised a $500 million issuance of an exchangeable bond in August 2025. Now, next, I want to talk about delivery as well, but it's useful for me to explain this in our Malaysia investment strategy. This is the framework that we use for the Malaysian investment. I introduced this last year. That's what we did in 2024, and 2025 was about consistent delivery of this investment strategy. Now, you see, when we look at investments in the country, we hold investments and we get a return. But to make it more meaningful and really aligned to our mission of advancing Malaysia, we've actually clustered our investments so we can actually see the impact that it has onto the country. And the areas that we chose to have an impact in is what I call the key enablers to a country's economy. And this would be in the cluster of energy transition. It's important for energy resilience of a country. Digital, that's another area because it's all about technology and how we can innovate going forward. And then, of course, there's connectivity. We want to remain connected, not just for tourism, but also for business travel and also for cargo, for trade as well. So those are the key enablers under those three clusters. And of course, energy transition, we have Tenaga Nasional, Lestra. Connectivity, we have the airline, the airports, and we also have a tourism assets. And lastly, we also have digital, which traditionally is anchored by our core enablers, meaning your mobile operators as well as your fiber network. But this is an area where we play a large part in all segments. Apart from the key enablers of the economy, we also look at how we can actually deliver growth or innovation for the country. And this is done by a whole of nation approach or ecosystem building approach through our Dana Impact, where the theme there is about helping our firms do better, Malaysian firms do better, and that's transforming firms. And of course, this is about raising the ceiling. As far as the floor is concerned, it is focused on capacity building as well as community development. So I'm going to concentrate on two main classes. One is the transforming firms or Dana Impact, and then I'm going to talk about connectivity cluster. Right. So, as you know, innovation is important. And when we innovate, it's usually done by firms. And it's usually the startups that actually come up with new things rather than the big companies. So it's actually quite important for us to actually build this ecosystem around startups. And our role there is to look at investing or providing sufficient capital and also ecosystem building in our venture capital. And as you know, in 2024, we successfully merged Penjana Capital and MavCap under us. And now it's housed under Jelawang Capital. And 2025 was about execution. So in order to do this, first of all, we had to attract capital. And we brought in regional managers. We have AppWorks and Granite Asia coming in. And what they bring to the table is not just capital, but also experience, having accelerated programs and network building across the region, which the startups or the community in Malaysia has actually benefited from. At the same time, we wanted healthy local VCs to actually flourish. So we created a program called Emerging Managers Program. And over here, we have supported three companies for this. So they can not only be strong in Malaysia, but also in the region as well. So with that, I think we've done a lot there. In 2025, we committed 290 million of capital in this space. We saw a lot of startups receiving deployment, about 60 startups supported through our this program, and 10 startups through the actual new venture capital programs. So this is an important cluster for us, and we see it continuing going forward. The other thing is the mid-tier companies. Now, 36% of Malaysia's GDP is actually driven by this segment. But as far as numbers are concerned, the numbers, it's actually quite a small segment, about 3 or 4% of the number of firms. So this is an important segment. And what our focus in this segment is, one is to ensure that there's sufficient capital for these companies to grow further, but also assist them in terms of de-risking expansion. So de-risking expansion is done through, we provided a program called MTC Growth Innovation Program, which is typically available to the top multinationals around the world, but we brought it and made it available for our mid-tier company. And we also joined forces with Securities Commission in their Elevate program. And you see the names on the screen there are those who participated in this program and helping them plan of how to expand. And then at the same time, we also understood the market a lot more, having spoken to a lot of the mid-tier companies. They don't necessarily need just equity, but they also need credit as well, which perhaps banks are too large or too rigid in terms of providing it. And therefore, we attracted private credit funds to come in, Navis as well as Granite Asia, and of course private equity as well. So we brought in Creator is also already here, and we provided more capital to spur that growth. Now the third segment is semiconductors. Now here, as you know, in 2024, we brought in capital. One of them was Cambrian Fund and Bitrox, which we seeded, and we're seeing those monies being deployed. So we saw them investing in Skychip, Envision, and Nanoskunkworks. So we see this performing. So it's about execution this year. And at the same time, our investment in Syntint, for example, has benefited the country by having their R&D facility in Penang, and that ensured that we had about 800 jobs there. So again, when we invest, we do have a Malaysian slant to it to encourage them to have an impact on our economy. Now, next is the connectivity cluster. Now, as far as connectivity is concerned, as I mentioned, we put in the airline there, we put in the airports, and also some tourism assets. And let me explain to you why we did this. So back in 2023, when we were beginning to craft our Malaysia investment strategy, we actually did a study. And when we looked at the study, we found that the country actually lacked long-haul connectivity. Short-haul connectivity, it was very strong. One measure of that is basically the number of seats, aviation seats, per capita. And if we compare ourselves with our two main competitors, the Singapore and Bangkok, now for the short haul, we're actually quite decent. We're about 3.5 available seats per capita, versus Thailand was about, Singapore was about 3.2, and Bangkok was 2.3. But when it came to long haul, we're actually a lot lower. We're only about 0.5 seats per capita for long haul services, compared to 1.6 in Singapore and 1 in Thailand. So we felt that this is something that we needed to do more, and it wasn't just the airline, it was also the airport as well. And that's why this cluster is so important for us, because it's not just about connecting tourism, but also business travelers as well as cargo. So that's why we focus on these companies, right? So for Malaysia Airlines, I'm actually glad to say that we see a lot of improvements. Now, 2024, it was dogged with supply chain issues, which affected the whole industry. and that actually dropped the on-time performance of the airline significantly. But 2025 was about execution and delivery, and on-time performance improved to 81% from 72% in 2024. And of course, from an experience perspective, Skytrax ranking um, is also the 27th, which improved from 39. And you can see improvement, even from the cabin crew was also 8th world's best cabin crew. So you can see huge amount of improvements. And our operational improvements, the reduction in grounded aircraft by 83%. Now, why I'm optimistic about the airline is because I can see the energy and the resolve of the airline to get things done fairly quickly. At the same time, there's a network expansion and fleet modernization plan, which you've seen. We're back in Paris. We're in Paris. We're back in Brisbane. We see new destinations coming in. Uh, we have 55 737 MAX on order. We've got 40 A330neos. Delivery is a bit slow because of supply chain issues. So A330s, we only received 9, and I think the 737 is 14. But as we grow, you'll see more strength in the airline. And going forward, of course, it is to look at the network, to deepen the partnerships that it has, to focus on operational leadership, and also to diversify the revenues to other sectors like cargo, MRO, and other places as well. So that's something which is a focus for the airline. Now, the airport, which is the next slide, is also, I'm also very optimistic about this. As I mentioned, the completion per se was actually a month late. So it's actually less than 12 months. So we haven't finished a year yet since the take private. And over here, there's been improvements. I think we have clarity on network, on passenger experience, and also, as we mentioned the last time, there was a huge need for capital expenditure because it's quite severely underinvested, which we are doing and focusing on now. From a network perspective, I think we've introduced new network growth. British Airways is back. We have China Airlines coming in on a few places. So connectivity has increased, as well as passenger experience has also improved when we had better arrival. When we look at check-in, there's some improvements in terms of the open bag system, which increased the flow for open bags. The security check-in, we try to improve that further, as well as little things which we take for granted, but it is so important. So, for example, comm room or emergency people, which manage to save a lot of lives, by the way. These are people giving first aid in the airport complex. Now, at the same time, when it comes to spending, for example, capital expenditure, we've got Penang. There's huge amount of investments happening in KLIA and other airports as well outside of KL. So that is still ongoing. And I think while we're dealing with the legacy issues, I think there's a lot happening. So I'm actually quite optimistic about the airport. Next, also within this cluster, and we talk about Srinagar and Banganan Sultan Samad, which I think some of you have managed to attend. And I'm very happy about this because this was done in record time. Refurbishing a tier 1 heritage building is not easy. Every single step you have to deal with Jabatan Warisan. Now we managed to complete Srinagar in 10 months, and we managed to complete Banganan Sultan Samad in 10.5 months. And that was done so that we can be ready for Visit Malaysia 2026. Now, I'll also tell you why this is important. This is important not because it's apart from it being a national project under Warisan KL, but it also fits into the cluster because, as I mentioned to you, when we actually analyze this cluster, apart from having not enough long haul connectivity, we also found that we needed more, richer assets and reasons for tourists to stay longer in Malaysia. 76% of tourist arrival comes through KLIA. And when you think about it, the average stay is actually about 1 to 2 days. And repeat visitors, compared to the likes of Thailand or Singapore, in KL is about 45 to 55% repeat visitors. Thailand is about 60 to 70. Singapore is about 60. So there's a lot that needed to be done. So something like this is not just important for the country, but it will actually improve the tourism as well. So that's something which we are doing, and we're doing 8 buildings in KL, and we've completed 2. The next one will be next quarter, which is Pejabat Pos Lama Besar next to Bangunan Sultan Bersama. Now, so that's the connectivity cluster, which we've done. I just wanted to highlight because it shows quick execution and delivery. Next slide. This is about raising the floor, and we focus on 2 things, which is building capacity as well as vibrant communities. Capacity building by scholarships through our Yayasan Khazanah. We have about 120 scholars a year. KRI producing research, and K-Youth, which is our direct program where we try to bring in graduates to the right places. Here we support semiconductor sector, MRO sector, as well as all the other sectors as well, which is relevant for the country. And at the same time, we've spent about 123 million and engaged about 386 impact-based projects throughout the year. So that's something that we are also making an impact for the country. Now, next slide. So here we talk about moving forward and for 2026. So we do think that Malaysia will sustain its growth, resilient growth in 2026. And this is underpinned by strong private investment as well as the FDI, which will trickle into the economy. And this is amidst a more modest global growth that you see going forward. So that's our outlook for 2026. And if I look at ourselves for 2026, next slide, we're going to be focusing on execution again, but we're going to accelerate execution as we plan in our Malaysian investment strategy, as well as our global investment strategy as well. And this is something where we're going to look at the value creation for Malaysian companies, looking at a global portfolio to ensure that it remains resilient, focus on the catalytic areas under Dana Impact, and continue delivering our sustained contribution to the rakyat. So again, the key takeaway, performance, financial performance. We've had a resilient financial performance, a 7-year return of 6.1%. Our net assets is now at 105 billion. We continued to deliver in 2025, and you saw the main clusters, main connectivity, where we've seen positive changes when it comes to the airports. We saw it in our telcos for SmartFriend, and of course, we also introduced exchangeable bonds back into the market. And Dana Impact has done really well in the 3 clusters, and in total, they've actually contributed about 1.2 billion in 2025. And lastly, sustainable value delivered to all Malaysians, and continue to do that. In total, since 2006, we've actually contributed about 2.7 billion for capacity building and community development. So with that, I'll close and we'll open up for questions. Now, please speak into the mic. Please keep the question related to our 2026 and matters presented daily. May I first question? Yes, Norman. And looking at aside from the use of which sectors use and also given the cautious of six capital allocation, what's the okay, thanks for that. First, I'll take the first question and then I'll get Hisham to take on the second question. Now, I wouldn't say doubling down. I think we've already set the strategy and the path going forward under the three main clusters, which is the key enablers, and we will continue to do so. So connectivity, there's a lot to be done still on the airports and the airlines. Energy transition, which is really about looking at grid resilience as well as renewable energy, and that's something which I think we can do a lot more as far as RE and what Tenaga is doing in terms of the grid. So that is still an emphasis. And lastly, in terms of digital, what we have been doing is fixing or improving the performance of the likes of Axiata, etc., in order to make them more resilient and more I guess, improve their value going forward. But at the same time, this is also an area where we can try to collaborate with others to see what more we can do for the country. And data impact, that remains a key focus in all segments. So that's something that we will accelerate the delivery. Second question.
Thank you, Norman. I think when we discuss about risk, what we need to appreciate is exposure to risk premium made. We want to capture return above management. And I must say that despite a volatile year in 2025, done really well given volatility. Portfolio is very resilient, well diversified. And if you look at our global exposure, we actually have significant exposure in the developed market. As you know, benchmark MSI ACWI, 90% ACWI is in developed market, 10% in the market. So last year, our asset class we underperformed. So going for 2026, potentially depending on Fed interest rate, normally when Fed bringing down interest rate, depending on inflation, the market. And to be fair, the last 2 years, the emerging market done really well. Last year, the emerging market outperformed. We look at China, we look at Korea, Taiwan, even Malaysia. I think not many people realize that the last 2 years, in US dollars, we have done 40+%. Obviously, ASEAN about 31%, Malaysia 41% in terms of US dollars. And this year, Malaysia US dollars roughly, I think 16-17%. Something that works well for our exposure, still overweight emerging markets. And one of the things that I worry about is, regardless what we think of the US, not just us and many other asset owners as well. US GDP roughly about 25% of the world GDP, but in terms of global index, that's 25% global. Whether you like it or not, your return depending. Thank you, Norman.
Question. The gentleman in the green. I'm Daniel from. Could you update us on and are there any sectors out?
Thanks, Daniel. Now, as far as planned things, I think as and when they come about, we will, of course, inform the market at the right time. Now, I think when it comes to sectors that we want to focus on, I come back to, I guess, what we want to do going forward, our Malaysian investment strategy, as well as our global portfolio. Dr. Isham mentioned to you about our global portfolio, how we manage the risk, And as far as Malaysian investment strategy, it is looking at the clusters. I come back to the connectivity, the energy transition, digital, and really looking at done impact and try to make sure that that is, and there's actually huge spaces, by the way, that we continue to deliver that.
Hi, good morning. From business today. Datuk, I have regards to the strengthening of the ringgit. How does that play with the strategy?
Okay, I think as far as, well, I mean, domestic strategy, our stakeholder receives ringgit and is interested in ringgit. So therefore, domestic is actually quite important for us. And I come back to that Malaysian investment strategy. So that's something that we do focus on. As far as global strategy is concerned, now, when you actually think about it, we do have, one is a natural hedge in a way, where we do have some funding in dollars for dollar assets, but that remains, at least for overseas, is still long dollar as far as assets are concerned. But having said that, I think this is where Datuk Hisham has mentioned, is looking at the growth aspects of those assets. And I think when you look at the net effect, as you've seen of our performance this year, it's for the long term, right? It's for long-term delivery of positive returns. Now, I want to emphasize again, and that's why I talked about long-term returns. We have cyclicality in terms of markets. We have cyclicality in terms of profits. But when we invest as a portfolio, and we invest for the long term, which smooths things out. And that's our focus.
Question? Following your recent engagement and as part of so India is a high growth. How is Khazanah? Are you active? Ask what about beyond India, which country?
Thanks for that. I think the global investment strategy is about diversifying risks across asset classes as well as geography. I think India has actually done well for us. I think we were there since 2008, so that's 18 years, and it actually has grown. But again, it is part and parcel of our global investment strategy. That's what we do as far as Khazanah is concerned. It's an exciting country, no doubt, and others as well. But there are opportunities where the portfolio companies can also capture as well. I'm going to get Hisham to talk more about the how we manage our funds globally, how we manage the, like you said, diversifying the risk, ensure that we get the long-term returns.
So I think India for us has been a good country that we have really outperformed. We have always overweight India, for that matter, China as well. So US dollar return been fantastic the last 10 years for us. I would say low double digit return, and something that we will continue to maintain exposure. Given India, look at India economy roughly about almost $4 trillion GDP. GDP per capita is still below 3,000. ASEAN is about 4 trillion. And then China is something that we need to pay attention. China over the last 2 years have done really, really well. And you can see last year, Hong Kong IPO, plenty of IPOs, and I expect this will continue this year. And one of the things that we want to pay more attention this year is kind of not want to miss sort of the right tail of China future. How do we get sort of some convexity in the right? Some of the sectors that China has really, really advanced and given the government emphasis in subject. So India and China, the emerging market is very, very important. And as well as
from the
Thanks. First, I think there was an opportunity in EDOTCO in order to increase our stake, and actually we saw value in that, so that's why we took it. And I think um, anything else, whether it's well, even M plus S, I think when we're ready to say anything, then we will.
Question.
Sorry, who's that?
About his business today.
Okay.
About business today. Blog. Anyway, this is regards to MHP. You be able to look at our assets. And could you also give Indonesia's recent sovereign wealth? You feel that the which is
Okay, on the first one on the airports, I think, and the strategy of what airports wants to do, a lot of it has actually been communicated in a way as part of, you know, uh, uh, what we discussed last year even. There's a huge amount of focus on domestic, existing operations, a lot to do. There's actually so much to do at the moment when it comes to existing assets in terms of bringing it up to standard, bringing in the network, looking at the passenger experience. So it will be focused on that as opposed to distracting itself with other acquisitions, etc. So it's going to be very internally focused on its existing assets. Um, now, sorry, there was a question on that. Maybe I can answer this question generally. And when you look at the idea of, not the idea, when you look at the current environment of geopolitics, a lot of nations would want to enforce industrial policies. And a tool to actually make that accelerate that program tends to be more of providing capital alongside those industrial policies. And those capitals could be in the form of sovereign wealth funds. Now, we don't see it as far as competition at all. I think it's part and parcel of growth. And you know, when it comes to investments, by the way, yeah, fine. You know, some people compete, but actually, it's actually quite good because most disciplined investors and long-term investors, especially sovereign wealth funds, um, are more particular about longer-term returns and less about overpaying. So, yeah, I think we welcome more funds.
I'm Myra from Khazanah. My question on the dividend to the government. So with Khazanah's 5.6 billion profit from operation and engagement with the government, can you share how does Khazanah balance delivering shareholder yields invest for long-term portfolio risk?
Okay, thank you. Thanks for that question. I think that's a very good question, Mara, because that's something that we have to manage, right? Long-term return, but at the same time, we do have a requirement to support the government in terms of profitability and providing that return. But here's the thing: this is why I think it's important for us to actually have that balanced um, portfolio to manage to diversify the risk. So then when we look at the returns, it's fairly consistent. There's going to be cycles. There's going to be cycles up and down, but the focus is on long-term return. And I think you've heard from Datuk Isham how he manages the global portfolio, how he actually ensures that we balance between the geographies, balance between assets, and have the consistency in returns. Now, with that consistency of long-term growth, as well as cash flows as well, we'll be able to support any dividend requirements as and when every year. So it is about that. It's diversifying risk, balancing the portfolio, and focus on the long term.
Further, if I may add, I think if you look at what government, especially the finance, launched the gear up, I think late last year, start focusing on the target. This is public. far recently on his Instagram. So the target is additional 100 billion increased market cap over the next until 2008, from 2024 to 28, with roughly about target of TSR about 7.5%. This is under PR program, and I think we look forward to ensure that all the DRC companies, especially Khazanah DRC, perform. If we get higher returns, 7.5 or even higher, therefore meets what Dr. Feisal said, we can fund the new growth in terms of what the company want to grow, we can give dividends to the government, as well ensuring that KLCI can perform and attract investors. So that's a program that I'm actually quite excited about, that the government launched. Maybe not being covered properly last year.
Another one?
Daniel.
Yes, Daniel.
Hi again. Could you provide any updates of Thank you.
You know, a lot of people talk about rare earth, and without realizing that these are items which take a long time to do, and these are items where you know, rare earth is not rare, right? So it's really about the processing that needs to be done. These are big, huge investments which take a long time to actually look at. And at the same time, when you look at the whole economics, whether it's supply or actually demand, you really have to have a more integrated approach. So if you look at the in Malaysia, for example, right, a lot of the deposits or the ones that have rare earth, it still hasn't been validated yet. And in terms of extraction, there's some environmental requirements in relation to that as well. So these are things where I think there's a lot of policy making, there's a lot of validation work that needs to be done even before anything else that can happen. So it's something which I think is important for the country, but a lot more work needs to be done for validation, for environmental protection, etc., as we go forward. Next slide.
Any more questions from the floor? Otherwise, then please join me in thanking Dr. Feisal and our panelists. We have now come to the end of our briefing. Press release is readily available for download as well as the presentation. You may have already downloaded it when you register, or otherwise do download it by scanning the QR code on the screen. We have also prepared some packed refreshments for our media friends here. Should you need all the stories immediately, our media team reps can continue to our working space. If you have any further questions or require assistance, please do not hesitate to contact myself or my colleagues from the group. Thank you, everyone, and have a good evening. Thank you.
Thank you. Patut ada folder kan? Folder apa? Boleh. Pegang. Oh, okey. Nah,